Hi there and welcome to BloombergQuint, India's first digital business news service. I am Neeraj Shah on a day when our markets don't seem to be echoing the global sentiment. Devina, good morning.
Good morning, Neeraj. And most definitely one would have anticipated the fact that the US had such a stupendous rally yesterday that some of it would have been reflected in our markets. The rest of Asia is reflecting that, but that's the snapshot of the US equity markets. And this was primarily on the back of, the fact that now we've got Joe Biden, who is the formidable counterweight to Bernie Sanders. And that's something that kept the market really active. And the fact that earlier on, there was a little bit of concerns with regards to the, economically disruptive policies that could have come about when there was no competition against Bernie Sanders, but now that seems to be going away, and that's what the markets are looking at. And also the fact that there has been a more coordinated effort by central banks. You've got Bank of Canada also that has reduced its rates by 50 basis points. The IMF is stepping in. So all of those factors being put together really worked well for the US equity markets. The bond yields are something that you need to keep an eye out on, and that falling under 1 is definitely, however, an indication that the markets are still looking out for some bit of uncertainty with regard to coronavirus, but there are also possibility or a probability of factoring in a further rate action. Now, that's something that we'll have to wait and watch, because 17th or 18th of March is when the Fed meets, and whether or not anything else could be done, because that has been categorically denied by the Fed chief in the previous conversation as well.
Yeah, it'll be interesting to see. I think the moot point is that if indeed it's Joe Biden, and that's what the market seemed to be betting yesterday, then you have either a Republican candidate, if Donald Trump comes back or Joe Biden comes back, the economic policies may not see a complete rearrangement, and that should probably augur well for the markets. Yeah,
I just want to quickly look at Asia as well before we step in and get in some more opinion on the global market. So Asia probably lockstep with what US is doing, not at the same quantum, but still up in the green. SGX Nifty, though, is flat, marginally negative. But let's bring in Seth, our Freeman of Glassratner Advisory and Capital Group. He's joining us right now on the show. Seth, thanks very much for taking out the time. Yesterday's mood for the markets was primarily driven from the political front and not from the fact that coronavirus still continues to linger and still continues to weigh down on market sentiment.
Well, we sure saw the impact of the Fed's announcement soon afterwards, and the markets crashed. And today in the U.S., we saw quite an improvement. And I guess it's an expression of some confidence that not only the Fed is taking action, but a belief that the government is also moving forward, although it seems premature, on dealing with the coronavirus.
So do you feel that markets now could veer towards politics as well? Because that's what most analysts in the U.S. have been talking about. We've heard comments coming in from bigger brokerages talking about how politics is going to be the next area of focus from a market standpoint.
Well, I think that some pharma companies improved just with this idea that the Sanders Medicare for all is less likely to happen. So, that particular industry was positively impacted because of politics. But we're still very far away. It's still very early. What's called Super Tuesday is what drove the Biden push. But it's still very early in our cycle. I think that the coronavirus, until it's really understood how deep and broad that is still going to be an overhang on the market.
You said just one question from my end. If indeed this coordinated push, US has the US government has done what it could do yesterday, and the IMF has allocated about $50 billion to combat this. Do you think this coordinated action could take the US markets higher? India is somehow not quite reflecting that optimism, but if US keeps on moving higher, at some point of time, it will reflect on the others too.
If a sense of confidence returns, that would be very positive for India, for all emerging markets. Investors don't like the uncertainty is one issue, but we're in kind of a situation of unknown, and that's it's certainly, there's some speculation. Could this be the black swan event? and we're just going to have to see. There's more people in the San Francisco Bay Area where I live, new infections being reported, cases being reported. So it's certainly not over, but it could, if we get some extended improvement in sentiment, that would be very good.
Okay, let's wait and watch if that happens. But Seth, Freeman, thanks so much for joining us and giving us that quick perspective. A bit of push and pull, isn't it? Global central banks and monetary authorities are taking all the action that they can. But the disruptions or dislocations that get caused due to pure business activity are a bit of an unknown entity. By the way, just very quickly, what should watch out for in India as well? I mean, frankly, the bounce is not quite reflecting as we've shown. The SGX Nifty is lying absolutely flat, in fact, marginally in the red. So the bounce, if any has to come about in India, might be on the back of some heavyweights. So 2 or 3 stocks or 2 names that I think you should watch out for, and very quickly laying them out. Reliance Industries, the fact that the government has asked the telcos to pay the AGR dues in full led, and this announcement that came in the dying moments of trade yesterday for Bharti led to Reliance moving up in trade. So do watch out for Reliance Industries. If at all it has a good day, or next 2 days which are good days, then it might actually help. Maybe not as much for Bharti and Vodafone, but Vodafone moving down or Bharti moving down too much will not have that big an impact on the index, I reckon, because of the weight. And then HDFC Bank, clearly the most important stock to my mind. They've reconstituted the MD search committee as well. But the Citi note today is very interesting because it speaks about the other overhang on the stock, which is what happens to the business momentum. Now, HDFC Bank, in this note, they've told Citi that they expect limited impact of the soft macro and the COVID-19 on the unsecured retail book. And the bank is not seeing any issues with customers impacted by the supply chain disruptions as yet. So they are pretty confident about how business momentum is right now, and which is why the stock trading at about 3.1 times FY21 price to book, which is the cheapest since 2011, might be something that people might want to look at. Let's ask Parthiv Shah if he's looking at that. He's director at TRACOM Stockbrokers, joins us right now on the show. Parthiv, good morning. The issue that plagued the markets yesterday was not really necessarily just the coronavirus impacted names, but the heavyweights. Bajaj Finance down about 5%, HDFC Bank about 3.5%, Reliance Industries was soft, and these stocks are just failing to attract investor attention in the near term.
Good morning, Neeraj. See, Neeraj, what tends to happen is that with the global scare of coronavirus, and especially now in India, we are seeing even some sort of delivery selling coming from the FIs and a lot of ETF money. The best possible exit for this ETF money tends to happen in these stocks where there's a lot of liquidity, where there's been a decent run up in the last 2 to 3 years, where they can book some profits. And I think it's not that they will try and see the long-term fundamentals at a point in time when they have to book money for the redemptions that they face. And I think looking at the US yields, the way they are continuously going down, I think goes to show that a lot of money is coming out of stocks, not only in the emerging markets, but also from the developed markets and going into these bonds. So I think at such a point in time, I think it's hard to debate on the fundamentals long-term story. It's just about the massive amount of selling that comes up. And no doubt so far, a lot of DIs, the domestic institutional investors, especially the likes of mutual funds, they have fancied their chances and sees this as an opportunity to buy into stocks. But their intensity of buying has not so far matched the intensity of selling that we have seen from the FIs. So I think that is the reason why we are now seeing even the bluest of the blue chips, the stocks where the high end of the valuation band held up for very long, we are seeing some sort of correction. That is where, Neeraj, we feel, I think, could lie fantastic opportunity in our markets for investors for the long-term horizon. I think a lot of benefits that also comes with the global doom scenario is the lower oil prices. A lot of our industries have a lot of sensitivity towards lower oil prices, and with 10% correction in the Brent, I think we know that that's a positive correlation for the CPI data. It goes lower by almost 20 basis points, and also the GDP tends to improve by around 30 basis points, which is a positive sign. A lot of industries will do well in terms of the sensitivity of the crude. So I think we even looked at the PMI services data, which was certainly a positive surprise. And I think the market should not forget the tax cuts that we had seen and the rally that we had witnessed from 10,800 levels after that. So I think the markets are back to the same level, kind of near the tax cut break levels. And I think we see this as a very good opportunity to build a fantastic portfolio, though one might want to add in a staggering manner just because the virus spread is now happening in India as well. But I think it's a great long-term opportunity if one were to see it 3 years down the line.
All right, and if we were to approach 10,800, that would be giving up all of the gains that you saw on the day of the corporate tax cut announcements. Aside from that, Parthiv, we've been looking at a lot of these travel stocks, be it aviation, and yesterday, for some reason, it dawned upon the markets that IRCTC also will be impacted because of its rail travel, and the stock shut shop at lower circuit. Do you feel all of these stocks will continue to weigh down?
See, there are some of the sectors and stocks that we have decided to avoid. And I mean, there could be great opportunities in these once the correction is overdone. I think would be certainly airlines, hotels and hospitality, movie theater exhibitors, and even some select pharma companies which are overly dependent on China for supplies. I think these companies probably, if at all, fingers crossed that this 29 cases of coronavirus in India does not spread to levels of say 500, 1,000, because India is a very vastly populous country, and I think if we can hear of cases of thousands in countries like Iran, Italy, and I think there will always be a scare, and we feel that there won't be participation in these sectors because these are the sectors which has a huge sensitivity to any sort of virus spread in our country. So I think as such, a lot of the companies in this sector are very richly valued. So I think these are the sectors which I believe, at least till the dust settles, one should totally avoid.
Okay. And I guess the market is doing that. But lots more to watch out for in terms of some specific stocks in news and what brokerages are saying early this morning. So we're going to keep track of that. Nikki is joining us. Sameet is also joining us with the same. Nikki, actually, I'm going to start off with you first on some stocks in news.
A couple of them. I'm going to start off with our all cargo logistic, where the company has received SEBI approval on its open offer to acquire 26% stake in Gati. The company is set to acquire around 3.17 crore shares at a price of 75 each, and with this, the stake in Gati would stand increased to 46%. Company has already deposited 238 crore. The open offer is expected to be launched in the month of March and closed by April. We are also looking at L&T. Now, this is a business standard report that we've picked up. The company plans to become an asset light company and reduce the debt by as much as 30,000 crore by next financial year. It's planning to sell entire stake in L&T infra development projects, Nabha Power, and transferring its stake in Hyderabad Metro to InvIT. We are also looking at HDFC Bank, which has reconstituted search committee to identify its next managing director. Renu Karnad has been appointed in the aforesaid mentioned committee, and Aditya Puri shall continue to act as an advisor to the committee. Last on the list, we're tracking Deepak Nitrate, where the board has approved an investment of around 56 crore for picking up maximum stake of 20% in its Oman arm. The target company is setting up a project to manufacture downstream products.
Right, Nikki, thanks very much for that. What are brokerages saying, Sameet, this morning?
Well, first one is on Sun Pharma, where Investec has upgraded the rating on the stock to a buy from a sell and have hiked the target price to 480 from 400. Now, earlier the brokerage had a sell rating because of a significant increase in expenses like the research and development and sales and other administration expenses, and because of a slow ramp up in its revenue trajectories for the specialty and other segment. However, the same has played out according to the brokerage. It also says that the current valuations underappreciate the long-term value potential of specialty and the API businesses of Sun Pharma. Now, because of the investments done earlier in the specialty business, there will be an improvement in sales ramp up, which in turn will be the key EPS driver for Sun Pharma going forward. Now, the brokerage only sees the near-term risk associated with the pricing, price fixing probe and other Ranbaxy antitrust litigations for Sun Pharma. The second one is on Dalmia Bharat, where Kotak Securities has upgraded its rating on the stock to a buy from an add and have maintained the target price as 1,050. Now, according to the brokerage, The company is gaining scale without adding any leverages, as it is on track to reach the 37 million ton per annum capacity by financial year 2022. That would lead to deeper penetration in West and the East region. Now, with access to nearly 20 states, Dalmia is no longer a regional player, says the brokerage. Now, Dalmia, with 65 to 70% of its sales coming from the East market, is the best quality proxy play for the East region, says the brokerage. Now, it also says that the concerns on Treasury appears to be overblown, as a resolution of the mutual fund case and a divestment of its IX holding could trigger a re-rating for the stock. Lastly, attractive valuations make a risk-reward favorable for Dalmia, and hence the upgrade done by Kotak Securities.
Right, guys, thanks very much for that. So much for all of those names. Parthiv, just come in when we're talking about the overall healthcare space right now. With coronavirus, the importance is laid and the stress is all the more important on the healthcare space, be it diagnostics, be it some of the pure play pharma companies. How do you play this segment then?
See, I think this is a segment which will certainly benefit a lot, because look at the diagnostic space. I think there, as such, I think a lot of these companies and the managements are talking about the fact that just because of this word coronavirus, a lot of people, even if they have mildest form of flu, the first thing they will try and do is to get themselves diagnosed, which I think before this word, I think people used to kind of procrastinate. So I think the volumes are certainly going to go up. And even a lot of hospitals, I think India, we always talk about this opportunity in the hospital segment, where I think the per bed for the population that we have, I think is one of the lowest in the world. And God forbid, if any such scares were to come, when a country like China or other developed countries are complaining about the fact that they don't have enough beds to cater to a lot of these new cases of patients coming, I think the utilization levels of our hospitals is certainly going to go up. Whether we talk of likes of Narayan Hrudayalaya, Apollo hospitals, I think these guys are certainly going to do well. And this is one sector which I think over the next 2 or 3 quarters will tend to do very well, along with the diagnostic space.
Okay. Well, let's wait and watch. Narayan Hrudayalaya, I think there was a fundamental call as well yesterday on this one from HDFC Securities. I believe that's the pick of the week from HDFC Securities, Narayan Hrudayalaya. Let's wait and watch how this one shapes up. But this entire space could be an interesting one to look at. Let's focus a bit on the charts as well and the derivative positions as well. Manoj Vayalar of Religare Securities joins us right now with his thoughts on the charts and the derivative positions. We'll also get in one more guest to talk about this entire piece. Okay, I think we just get this conversation going in moments from now. You've got to keep in mind, viewers, that amongst other stocks that would be in focus today from the derivatives position is Yes Bank, because there were increasingly bearish bets taken on this one purely from a trade perspective. Keep that at the back of your mind, but it's entered into the FNO ban, and therefore fresh positions on Yes Bank may not be taken, and therefore that sharp corrections that we saw on Yes Bank the last couple of days might just ebb a little bit. Will it stop permanently or in the near term? Don't quite know, but because it's in the ban, Devina, the extent of bearish bets might just come off a bit, because people can't take fresh positions except for intraday.
Yeah, but this has happened, I think, 3 or 4 times now.
Yeah, and still the stock, you're right.
Yeah, it's just this stock has been just coming in and out of the ban period, so it's very difficult actually to even gauge whether or not there'll be any reaction either on the upside or the downside.
Yeah, no, upside in all probabilities ruled out, because the sentiment is so bad. But yeah, you're right. I mean, even when it was even at 35, 36, it was in the ban, and then it went up to 38 also. So it'll be interesting to see what this one does. But the fundamental conversation on Yes Bank is something which is completely different. Parthiv, just wondering, we've spoken about HDFC Bank, which is at one end. We've spoken about Yes Bank, which is at the other end. What about the ones in between? From amongst all the names that have corrected a little bit, Axis Bank was very, very interesting. At 750, people could not get enough of it. At 675, there are not enough buyers.
Yes, I think that's a little surprising, because at these levels, I recollect they had done a huge QIP, and I think still that capital is with them. And Neeraj, one argument in the banking sector is that a lot of banks, where they've raised a lot of capital and sitting on very good capital adequacy ratios, are currently struggling to park that capital at negative cost of carry. So I think going ahead, it seems that these lenders are certainly going to become very aggressive in selective lending. And even looking at some lead indicators in terms of the composite PMI, our sense is that the credit offtake will take place, and these are the type of guys which will benefit in terms of increasing their market share selectively, because still a lot of PSU lenders are struggling to kind of really do a lot of lending. So I think likes of Axis, HDFC Bank, which you mentioned, looks extremely good after the recent pullback of almost 10 to 15%. We also like ICICI Bank along with Kotak Mahindra Bank. So these are the 4 banks in the private sector banking space where we are focused on.
Okay, Manoj Vayalar of Religare Securities is back with us. Manoj, good morning to you. I mean, the system is stacking up shorts since a few days now. Do you feel that there could be a meaningful short covering rally on the index?
Good morning, Devina. Devina, I guess, see, short covering, this concept works when the net weighted average price of the prevailing shorts exceeds its previous average. Now, what I'm trying to say here is, for the Bank Nifty, precisely 29,380 is a weighted average price in which this entire March series is carrying the open interest of short positions. For the Nifty, it is somewhere close to 11,460. So till the time we do not close above this and we do not see a put writing, because the VIX is at a good 26%. At 26%, VIX simply says that a swing of 520 to 530 points is possible for the Nifty in the next 30 days. Now obviously the expiry is within the 30 days, so the VIX calculates to almost 21%. So what I'm trying to say, if the VIX falls to till 21% and if we see put writing, and if we are going above this 11,460, in these 3 conditions only the concept of short covering might come in, and I am afraid I don't think it will happen so fast. The culprit is the weekly expiries that we have. Because of that, the option writers tend to take the advantage. Now that is, I think we should be on the same page. So I would recommend selling 11,300 call and put option of today's expiry. You get it close to 130 rupees. The stop loss should be, let's say, maybe 160 rupees, and the target is close to 40 rupees in that.
All right, so some options plays here, but Manoj clearly indicating that there is a very slim chance of a big meaningful short covering rally unless and until the Nifty goes past 11,400. But Manoj, just stay on. We'll come back and talk about individual stocks as well. But onto a special segment, Bloomberg Edge, where Yash Patil talks about a pattern that the Bloomberg terminal has thrown up on a daily basis. Good morning, Yash. What's the stock on your radar?
Morning, Devina, and we're looking at Vinati Organics. Most of these chemical names, they've been doing extremely well, and Vinati Organics has been no exception. But the MACD indicator has finally given a positive signal this time around. So let's first try and understand what the MACD indicator is and how do you interpret it. The MACD is basically a trend following momentum indicator, and it shows you the relationship between the 2 moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line. Now, in the case of Vinati Organics, what we've seen is that the MACD line, which is the one in blue color, that has crossed above the signal line to give that positive signal. Now, in conjunction with the MACD indicator, let's take a look at the price action as well. So the yellow dotted line shows the strong support for the counter, and not once, not twice, and not even thrice. In fact, this is the 4th time that it has come down to the levels of around 950 and bounced ahead, and we've seen the stock close somewhere around 1050 in yesterday's day of trade. Now, one more thing that I want to highlight over here, and maybe if you could see, is the fact that even though the price made a lower low from the levels of somewhere around 975 to 950, look at how the MACD has behaved. The MACD line for one has made a higher low, and the MACD integer line, which is the bar graph over here, that has gone from a big negative to now a positive. So that is a hidden divergence that we are seeing within the MACD indicator as well. So both the price action as well as the indicators, they are suggesting a buy signal in MACD, with the risk to reward ratio also being extremely favorable.
All right, and what is that risk reward ratio? How well is done in the past?
Devina, 5 out of the last 3 times that the MACD has given a positive signal on a 1-month closing basis, the average returns have been somewhere around 10%.
And that's a good return in a falling market. Thanks a lot for that, Yash. 10.6% hit ratio returns on this particular trade, but no recommendations there. It's just what the indicators are suggesting. Manoj, 3 new entrants in the F&O space: Info Edge, Bandhan Bank. I'm not getting the name of the third one. But
HDFC Life.
HDFC Life. 3 of them at the start of the new series. What kind of build-up have you seen?
See, generally what happens is there are two concepts to a stock entering into the F&O and the one which happens in an exit. When a mutual fund enters into a stock, there is a reverse arbitrage and a fresh arbitrage. These are the two methods. In a fresh arbitrage, you buy in the cash market and you see close to a 2 to 4% shorting into the derivative market, which gets rolled every month. Now, because this is a new entrant, I guess the first 3 months we need not really look into the open interest, because that is simply not going to give us any projection. So as of now, because even your banking, which contributes around 34% of your Nifty, and the major culprit of shorting, which is still prevailing in the bank Nifty, I would still not get into any stocks. Rather, some stocks which has a weighted average price right from the Jan series onwards, from Jan to Feb to March, we are seeing some weighted average price concept working on those. So two stocks, I would say, Hindalco and Exide, this might still be on a buy side for at least a 2 to 3%. The reason why I'm saying this is, I'm afraid we are not sure if the bottom is being made, because at every time we see a surge close to 1.5–2% towards the weighted average price, the fresh selling comes in. And because the VIX is at 26, and mind you, even during the union budget, we did not really cross an 18 to 19%. So the fear now that the market is facing is a good 8% exceeding to what the union budget would have given you. So, if we are in that condition, simply just buying the stocks at this level, I would not really do that. So, but now today, because it's an expiry day, and we believe that possible there might be a bounce of close to 60, 80, 100 odd points, the stocks which would benefit would be Hindalco, and the strategy would be to buy close to 158 to 159 on the March futures. The stop loss should be 150, and a good weighted average price of 174 to 178 is where we believe some distribution or profit booking might come in. Exide also tops the list. 160 is what we recommend buying that, 154 is the stop loss, and a good 14 rupees, 174 as a target on that.
Sameet, good morning. We'll talk about your index strategy, but since you're on the topic of stocks, let's first talk about the ideas. We're likely to start off very flat. What are the stocks that you're betting on in that regard?
See, since last couple of days, our focus was mainly on some of the defensive names within the IT space. We've been liking TCS, which has already given decent move. Pharma space we were closely tracking, and Cipla was our preferred bet, which has already moved quite well. Lupin is the one stock that has given decent move, and it is likely to head higher. But from the mid-cap basket, from the cash segment, we like Granule, which has been clearly one of the rank outperformers within this space since last many months. So Granule, in last 1 hour, we saw a good surge in this counter along with the volume activity. So we expect a continuation of this move. Follow-up buying would take it towards 180 to 188, which is our near-term target. It can be bought with a stop loss around 166. And second buy would be a contra buy on Just Dial, which has been a laggard. It has already corrected quite a lot and trading around its multi-year support lows. Yesterday we saw mild profit booking, but day before yesterday, price action was quite encouraging, and yesterday's decline can be construed as a good buying opportunity. Hence, we expect Just Dial to give a decent bounce back. 530, 540 would be the near-term target for this particular counter. Can be bought with a stop loss around 469.25.
Okay, watch out for this one as well. Now, the other stock that we can't not talk about today is IRCTC. On most days, we talk about IRCTC because of the gains that it has shown. In today's session, we're talking about it because of the crack that it has shown, 10% lower. Now, the question out here is only that whether these concerns right now diminish the earnings capability of IRCTC over the medium term or no. And frankly, that's unpredictable. So the question is, are people selling out of this unpredictability because of the run-up that it has seen, or because it's richly valued, because the valuations don't quite seem as rich as maybe some of the other companies do?
So obviously now a bulk of its earnings was from online ticketing. Now, if that suffers, then you are going to see an impact of that on IRCTC's earnings, even despite the fact that people have already factored in almost a 700 crore income for the year from the conveyance fee. Now, if the online ticketing itself starts to drop, that figure also starts to get challenged, and therefore the big run-up and the pile-up towards 1900, 1950 definitely seemed like a stretch at that time. And now that the street is digesting that it's not just aviation, but even railway stocks that could get impacted because of railway travel, I mean, it's a natural course correction.
We'll talk to Parthiv about this, but keep in mind, I think the important point out here is that unlike consumption demand, a demand for a train ticket is for that period. So if a company is lost the revenues, if it loses, we are not saying it is losing, but if it loses the revenues in the months of March, April and May, if it does, then it's not that people will then travel more in the months of June, July, August, and the bogies will be full more than capacity. So that doesn't happen, and which is why I think the concerns around IRCTC might well be justified. We don't quite know that. I think we've tried to contact the management. They're shying away from speaking right now. But as and when they do, I'm sure we'll get them as well.
Yeah, 1565 on IRCTC. Good to get Parthiv's opinion, but in a bit because we're now very close to pre-open. SGX Nifty, absolutely flat. There's no major indication in terms of the direction of the move on the Indian equity markets, but Asia as a bucket is doing well, up about 1% across the board for China, Hong Kong, as well as Japan. Waiting to see what happens to some of these stocks like Reliance Industries. They saw that last minute pickup in yesterday's session, whether they flows through in today's trade or when supports the index, and whether or not HDFC Bank can make a comeback. Nifty opens lower. That's the first stick that you're seeing, a 0.5% cut. Sensex, on the other hand, opens higher, but again, very volatile, too much of gyration. GAIL is one stock that you need to keep in mind. The stock, remember, had been heavily beaten down already. And the stock first sticks, okay, so you may not stick 10% higher. Bajaj Finance, the big knockdown that it got in yesterday's session. Today's session, the pre-open suggesting some recovery in the stock again. Tata Steel, SBI at 292, Bharti Airtel at 529. Tata Motors too. Yesterday, remember, we had China sales numbers dropping 80%, which is the lowest on record. Tata Motors, has already seen a very big reaction, and the stock today is holding up okay. Coal India, Dr. Reddy's, Asian Paints. Asian Paints is not budges. This is one of the stronger players there. Maruti Suzuki at 6,400 from lows of about 6,200. So this has actually made a comeback in this period. What's lost out is M&M, marginal cuts. Vedanta is down 1.5%. L&T is down 1.5%. IndusInd Bank, Britannia, Z, Bharti Infratel, Nestle are some of the other bigger losers in today's session. But the currency weakens further. So 73.38, and this is now where the concerns start to pile up. While obviously not for export-oriented companies, but otherwise as well. Once where we are talking about the fact that this is not going to be a very good value proposition even for foreign institutional investors that are coming in. So 73.37 to the dollar.
Yeah, it might be detrimental for funds which are already in and are looking at the currency depreciate, and therefore their returns depreciate as well. So you got to keep that at the back of your mind when you're looking at these. By the way, the Gas Authority of India is in focus. Remember, the government has the stock is up 10% primarily because of the government delinking GAIL, Oil India and Power Grid from the AGR case, and I think that's one big overhang out of the way. Maybe the street distrusted any which ways that the GAIL company like GAIL will have to pay such a large due, but nevertheless, now that it's officially out, there might be some positives out there. Some other names, the likes of ITI are gaining. Let's wait and watch. GMR Infra has this flash uptake. Don't quite know if it'll last or no. So those are 2 or 3 names that you've got to watch out for. I'm just interested in Vodafone Idea as one last stock before we move back to our guests. It's been asked to pay the dues in full, and as per the court order, the government has asked these companies to do that, and Vodafone Idea starts off on a slightly negative note. Let's wait and watch what happens here. Okay, move back to our guests. Parthiv, we were talking about IRCTC, and that stock will also come up on your screen. The question is, would you buy in this dip considering the long-term nature of this business, or would you believe that there could be better levels tactically to go out and buy this?
Tough one, Neeraj, because this stock has corrected at around 25% from its peak levels. And we've always discussed the fact that this is a company where there is also this advantage of a low float, especially at a point in time when the market realized that the service fee business is a 83-85% EBIT margin business and a huge contributor. And that changed the entire metrics for the company. And also the Tejas trains that they launched were really picking up far better in terms of a lot of street which had estimated that they would be loss-making initially. So I think they have broken even quite well. But now I think with the speed breaker, in terms of to understand the trends of the travel, even not only in the airline segment, but even in the railway segment, if at all, I think there are a lot of ifs in terms of the assumption of how this stock would pan out. If the spread of the virus has a bigger impact, then probably I think what we might see is further correction in this stock. So I think right now at this juncture, what my sense is better to stay on the sideline. Not that the story is over and not that this virus scare will take away the monopolistic nature of the business. They still have capex plans, especially in the rail near business, which will be more long-term in nature. So I think if at all, due to the low float impact, if this stock were to correct somewhere around, say, another 10 to 15%, then I think one should start nibbling into this name in a staggering manner, because the long-term story is extremely intact and the valuations tend to become very, very compelling.
Okay, that's IRCTC again down about 6.5% in today's session. Manoj, I want to go back to banks and specifically to HDFC Bank. There are some concerns and there are some overhangs with regards to the succession plan there, but management has put things into perspective, saying that everything was on the right track. You feel that right now it's a good time to be in a stock like HDFC Bank?
Well, see, if it is, if you take out the derivative part and if it is an investor, then obviously it makes sense, and there are fundamental analysts who would give in good values. But I believe, this Bank Nifty crossing 29,600 might not really happen till we are almost ending this March series, And I'm afraid I have to say this because I guess this is happening since October onwards. If you see, the FII route of entering into Indian market, we see a debt is to equity ratio which comes to almost 2:1. Now, September, October onwards, we saw the debt money out, and if you see the open interest with which is starting, the Nifty and the Bank Nifty both were less. And this month, if you see, it was hardly 10.4 lakhs versus at least a 13-14 odd lakh. So there is clear missing out on at least on the long trades. And after we opened out, Friday is where the carnage was. The Bank Nifty was down 1,000 odd points, and good 2.5 to 3 lakhs of fresh short is still prevalent, and that is a good 25-30% of the net open interest. So what I'm trying to say here is there is good amount of shorting which is at 29,500 to that 600-800 levels, which I do not feel might be covered so easily. Rather, once we get a closing about 29,900, let's say 30,000, that is the time I would still recommend buying an HDFC. Even costlier would make sense, because when you enter into a derivative trade, the M2M at such a high VIX of 26 would not really be worth keeping the position in derivative market. If it is the cash delivery based buying, maybe it would make sense, but I would still not advise buying any banking stock till the time we do not see that short covering from the VWAP concept, which has yet to happen.
Right, got that. Manoj, we let you go on that note. Thank you very much for joining in this morning. Manoj Vayalar, still not too convinced that it's the right time to enter any bank. Leave aside HDFC Bank. About 8 minutes left to go for market opening. Pre-open rates are just about starting to settle in. I want to come to you, Sameet, on some of the bigger movers of yesterday. Cipla, for one, saw a big uptick in yesterday's session. And any other pharma name that you feel is a good bet right now?
See, as I've just said in my opening remarks also, since last couple of days we have been focusing on pharma names, and Cipla is clearly one of them. We had recommended and we have booked out also because we've already got 6 to 8% in this particular counter. Apart from this, granules from the mid-size pharma names we have suggested, but Lupin is the one stock from the larger names. We still believe that some kind of catch-up rally is due for this particular counter. So we expect Lupin to head towards 685, 690. 690 is a strong resistance, so our near-term target would be around 680, 685 for this particular counter. In case if you get a minor dip towards 662, it would make it a good risk-reward ratio. So Lupin is the one stock that from here on we would expect some kind of catch-up rally. Can be bought with a stop loss somewhere around 656.
Parthiv, what about the companies which have been detached from the AGR case, the PSUs, GAIL, Power Grid, Oil India? Because of this news and even otherwise because of the inherent valuations existing, would you be a buyer into any of these names?
Not really, Neeraj. Even irrespective of the AGR news, even say a monopolistic company like Power Grid, where I've heard a lot of fund managers' commentary that the valuation is very compelling, the dividend yield is extremely good, quoting at below 1 price to book multiple, and it's an annuity type of a business model. But let's see what sort of wealth destruction these have been, despite the high dividend yields over the last 3-5 years. And I still really doubt their capital allocation policy. Most of the projects have cost overruns, most of the project executions have delays, and despite a lot of these companies being near monopolistic in nature, I think I really doubt if they can create a lot of shareholder value. At the best, at point in times, they could be good positional bets, but I think not investment bets for portfolio is what we sense.
Okay. I want to also focus on SBI and Parthiv, come to you. Today, probably the last day for retail investors to invest in the IPO for SBI cards. Yesterday, by the end of trade, a strong showing by the QIB portion at least, which was oversubscribed, closer to about 57 times, I believe. Total subscription also oversubscribed. Do you feel that this is now turning out to be a stock that probably is able to shut out the noise around coronavirus and may actually land up having a good listing, as contrary to what people had started to believe when the markets started to correct?
No, I think being one of the biggest size IPOs in the country, and more importantly, it has faced a lot of roller coaster ride since the IPO opened. And at one stage, I think people were fearing, and a lot of our retail investors were checking on us in terms of whether this would go below the listing price or what sort of future is it, because all of a sudden people started tracking the grey market premiums, which were very, very volatile. But nonetheless, we find this story very, very compelling. And the very fact that yesterday in the QIB segment, it was record of sorts in terms of the subscription numbers, which kind of surpassed almost 1 lakh crore, is a testimony to the fact that the long-term story is intact. And I think it's all about stories in India where there's huge under-penetration. 3 people out of 100 probably have a credit card, vis-a-vis every person in US having 3 credit cards. So I think that under-penetration story with this particular management, the way they have kind of shown the growth trends in the last 3 years and garnering a market share of almost 18%, probably markets will like such stories. And a lot of arguments are there that it's a 12 price to book multiple stock as compared to Bajaj Finance. But I think a good argument to that is that a lot of income that this company generates is through fee-based. And a lot of companies where there's a lot of fee-based income, probably price to book is not the right multiple but to track, but I think price to earning. And if I have to look at 2 years down the line, the current PE valuation, which seems to be expensive on the face of it, is kind of tending to get justified. So we are very bullish on this story, and we have suggested our clients to subscribe to it.
Okay, minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, SEBI approves all cargo logistics offer to acquire 26% stake in Gati. The company is set to acquire 3.17 crore shares at 75 rupees apiece.
HDFC Bank has reconstituted its search committee to identify the next managing director. Renu Karnad to be a member of the committee. Aditya Puri shall continue to act as advisor to the committee.
Deepak Nitrite Board approves an investment of 56 crores for a 20% stake in its Oman arm.
L&T plans to become asset light and reduce debt by 30,000 crores, reports Business Standard.
Investec upgrades Sun Pharma to a buy from a sell, hikes the target price to 480 rupees from 400 rupees a share, says valuations underappreciate long-term value potential of the specialty and the API businesses.
All right, watch out for all of these names. Sameet, a quick word on some of these specialty chemical companies and the trade that's open out there, likes of PI Industries, which held out in the session yesterday. Deepak Nitrite picked up from the lows of the day. Vinati Organics, which has actually been just about holding steady, not in any big major moves in that counter. But does it look primed for a bigger move?
See, I think from this space, clearly Deepak Nitrite as the one stock that has given gravity-defying moves, and there has been no stopping. But risk reward wise, it will not make sense, getting into this counter at current level. Vinati Organics, which has been consolidating of late, we would rather wait for some kind of breakout to happen. So 1030, 1035, these are the levels to watch out for. In case this particular stock gives a decisive breakout and volume starts picking up, then probably we would see a good traction in this counter as well. Then next levels to watch out for would be somewhere around 1080 or 1100 for Vinati Organic.
Watch out indeed for those. Okay, well, about a minute and a half left, and we'll take in final thoughts from both our experts post market open. Just keep in mind that quite unlike the SGX Nifty indication, we are starting off well, about 0.5% up for the Nifty, and maybe Sameet's view on the Nifty or the Bank Nifty, which we haven't taken thus far, will be important post market open. But this promises to be a good start. The interesting bit would be whether Indian markets emulate what the US markets did, or does the rupee come back to haunt us, because that will be the big determinant. And Devina, all eyes will be out on some of these heavyweights, Reliance Industries, HDFC Bank, to an extent even Bajaj Finance, because of the kind of drubbing that it took yesterday. All of these are sentimentally very important names.
Yep. Minute to go, so I think it's better if we can get in that top trading idea from Sameet. Sameet, one stock idea that you would hold by at the start of the trading session.
See, pharma has been buzzing since last couple of days, and Granules is the one stock that has been clearly outperforming since last many months. So I would go with Granules for a target of 188. Stop would be around 166.
Okay.
News it is from Sameet Chavan. And Sameet, just stay on. We'll want to take your index view post market open. But Parthiv, take a moment to thank you for joining us today and giving us your perspective. Really appreciate your time this morning. And about 0.5% kind of gains that we would anticipate for our markets, considering how the pre-open rates have been. The Nifty Bank is showing a bit of promise. This is despite HDFC Bank not quite participating, because I reckon SBI is showing some bit of a move. So let's wait and watch what happens there. And remember, viewers, stay on, because Mahesh Patil of Birla Sun Life AMC will be joining us on the other side of this to talk about his thoughts. But here's how the markets are starting off. About 0.5% higher, 66 points for the Nifty. Sensex about 200 points. And the Nifty Bank about 250 odd points. So the Bank Nifty, for a change, is actually outperforming the other indices on open. Let's see if this lasts. The mid caps and the small caps should also come up on your screen. Well, about 0.75% for the mid cap index. Small caps about 0.5%. They tend to participate with a bit of a lag. But the color is green on the screen, and I reckon that the heat map will show that we have a lot of green on the screen on the Nifty today. Yep, just about 6 or 7 stocks in the red. HDFC, ICICI Bank, Power Grid are amongst the losers. Yes Bank is lying absolutely flat right now. Remember, it's in the F&O ban. What is doing well is the question. So some of the global sensitives in the metal space, Hindalco, Tata Steel, JSW Steel are all in the green. GAIL reacts about 3%. There's a bit of a confusion about whether it's indeed been detached, these names, or whether they have to move to DSAT to try and get this, but the stock is reacting nevertheless. UPL, State Bank of India, after days of getting clobbered, is up in the green, and Bajaj Finance, after that sharp downtick yesterday, is in the green too. Mind you, the two heavyweights which also matter, Reliance Industries and HDFC Bank, are up about 1% apiece. So do watch out for that as well. That's a very important part. It's not been participating. If those two participate, if they do, that is, and if they don't see fund outflows, then we might actually have a good day. But the start is not bad, and it's quite unlike what the SGX Nifty was indicating. Very quickly, a couple of pockets that I want to highlight before I hand it over to Devina for what's happening across the broader end of the spectrum. Firstly, like I said, Reliance and HDFC remain in focus. Do watch out for these. There are brokerage upgrades that have come in on Reliance 2 days ago and on HDFC Bank today. Would be interesting to watch out for these two names. And then companies which are out of the AGR net, supposedly, GAIL, Power Grid and Oil, they're starting off in the green. Let's see if these gains last. Devina, what are you spotting?
Future Consumer, for one, is up about 7%. Diwan Housing Finance, I think this has been the 7th or 8th straight day in a row that the stock has seen gains. It's up about 5% right now, taking its weekly tally almost at 40%. Shilpa Medicare is up 4.5%. Union Bank is up 4.5%. The likes of an Indiabulls Ventures has moved up as well. That stock is up about 4%. Tata Elxsi 3.5% high. Indiabulls Ventures, remember, has been up 11% for the week. Tata Motors DVRs moves up about 3%. BGR Energy, Prestige Estates is up about 3%. Kitex Garments is not doing all that badly as well. That too has seen a move in today's trade. Then you've got the likes of REC, India Cements, Rallis, BF Utilities and Naveen Fluorine, along with a Deepak Nitrite and a Vinati Organics, which are doing well in the session. What's not doing well is IRCTC, and that stock this morning opens weak, and the pre-open ticks it indicated a 6% drop. It's down about 6.5% as well. Vodafone continues to look weak, and then you've got cuts coming to a Suven Life and your usual suspects, which you see, the smaller penny stocks which look to take the knock, and hotel stocks. stocks. Indian Hotels, for one, is down in today's session. The breadth of the market more positive, almost 1:4 favoring the advances.
Sameet, Chavan, very quick opening thoughts. We've started off well. Would you initiate a fresh trade on the indices?
No, Neeraj, looking at the downtick in HX Nifty early in the morning, our strategy was, buying 11,200 call somewhere around 50-60. It has already moved quite a lot, trading around 130. So there's no point getting into that at current level. And looking at the, India VIX, which is at elevated levels, one should avoid, chasing premiums. So now the strategy would be 11,250, focus on this particular strike, trading around 86 now. But we are seeing good intraday volatility in the market. So probably if this strike, if you get it somewhere around 50, 45 odd premium, then it makes a sense. One can punt, take a punt on this particular strike, 11,250 strike, buying somewhere around 45, 50, keeping stop loss around 22, and we would expect Nifty to heading towards 11,350, 360. So premium would be somewhere around 100 to 120.
All right, Sameet, we leave it at that. Thank you very much for joining us this morning. Mahesh Patil of Aditya Birla Sun Life AMC is joining us right now on the show. Mahesh, thanks very much for taking out the time. Too much panic or justified? Indian equities?
So I think it's not Indian equities alone, actually. We've seen globally there has been a sharp correction because...
They're recovering also.
Yeah. The volatility is very high because what we saw in the last 6 months also, because of the easy liquidity money supply, there was also the indices had actually moved up, again, going ahead of fundamentals. And with the slight scare coming in because of coronavirus, we've seen some unwind of that. Some nervousness was there at those high levels. And I think the data flows keep on coming every day. You see new data coming in, market reacting to that. There is some excesses which happen on the downside. I think you will see those bouts of volatility in the near term until we settle down. But I think these kind of corrections, I think obviously it's very sharp reaction in the last couple of weeks. And there will be some amount of pullbacks from those levels. But I think one has to watch out for the next month or so how things pan out. Obviously, the markets are looking now slightly more attractive than what they were earlier. If at all we assume that there is not much impact on the economy because of this virus, then it becomes a good buying opportunity at this point in time. But for that, we have to wait and see how things pan out, at least in India, because it just started. We've seen new cases come up in the last few days. And I think next few weeks will be critical to see how that pans out and how the market reacts to that.
So till then, you advise fresh investments? I mean, obviously, we're about 1,100 points off the highs, the record highs that we made. So stocks that you wanted to enter have become that much more cheaper as well. So, a staggered investment strategy, is that the route to take?
Yeah, I think so. I think, again, as you rightly said, even from a portfolio perspective, we're finding now stocks coming to levels which are looking more attractive for us. Earlier, probably wouldn't have participated because they rallied on the back of liquidity and they were out of our bounds in terms of price points. So that's clearly an opportunity in this market because we see it as a more transient phase, right? It will last for probably a couple of months or so. And then things could bounce back. And we've seen that happen earlier also in the earlier cases, where we've seen similar kind of situations. I mean, after 2-3 months, the markets have actually bounced higher than the earlier levels because when this thing normalizes, again, you see some recovery back in terms of the demand supply side constraints, which are hurt, they come back again. And because of the response by all the central bankers, there's enough liquidity money floating around, which comes back into the market. And for normal investors also, I think, while there could be some markets can undershoot from here on the downside, but you don't know, right, where it will bottom out. I think it's a good time for investors to start making some allocation. People who are waiting on the sidelines, this 10% correction in the market is a good time to make a beginning to make some allocations.
Mahesh, good morning. And very important to get your views today on a day like this. So thanks for that. How big a joker would the currency be in all of this? If the rupee continues to depreciate, if China, in order to save its invested companies from moving out operations elsewhere, does that step of trying to tinker with the yuan rates as well in order to make it more competitive and the resultant impact that it may have on other currencies? How big a joker would the currency be?
So the currency impact is very difficult because see, it's every country is getting impacted because of this, right? So even US, we've seen some weakening of the US dollar, and there is impact across the globe. India would also have some impact, again, in line with I think on the current account deficit, there are two impacts, right, on the currency. One is on the current account deficit, other is on the FDI, right? So on the trade deficit, we should be fairly okay. We don't see, because the linkages, global linkages are very less for us, right? In fact, if at all, imports have come down. Exports have also got impacted a bit. And the remittances, we don't see that impacting much. Oil prices have come down, so that's good again on the trade side. On the capital account, yeah, there could be some outflows, what we have seen because of the global risk off, and we've seen the last couple of weeks FII flows have been negative. So that can put some pressure on the currency. So one has to wait and see. I mean, our view has been that the rupee should not, we are not in a situation where our currency should really be too volatile. It could move along in line with what happens globally, okay, in line with that, but that is fine. I don't think it's a relative trade, right? In absolute, I don't see the currency really depreciating much.
Yeah, I was just wondering because the last 7 days, the rupee has been the worst performer, arguably, amongst the other currencies.
The rupee was also slightly overvalued, right? If you look at in the last 6 months, rupee has been slightly overvalued, and there was a case for some kind of a correction. And this current scenario has probably taken that, and with some outflows, we have seen this correction. But overall, our reserves are fairly good. Okay, so one should not expect too much downside on the currency at this point in time, unless probably we get into a phase where this breakout in India becomes very large, it starts affecting our growth and a lot of sectors get impacted, then probably one needs to start worrying about it.
Okay, so now we're talking about the growths that could take slightly longer to bounce back than you had earlier anticipated because of this speed bump of the coronavirus. The risk premium for growth in the developed market versus developing markets versus developed market was something that was attracting foreign investors to come to India in the first place. That risk, that gap of growth is closing in. The growth differential is closing in. Why would they pay that risk premium then?
So I think India has, I mean, our growth has lagged the global growth in the last 1.5 years, right? So we have been behind. We've seen a recovery in global growth much earlier, and because of our own problems, what we had. I think we are coming out. In fact, our view has been that we've seen the bottom in our economy in the last quarter, and we have seen a slow recovery from here, again driven by the big banking crisis is behind us, slow pickup in rural economy coming back, liquidity again coming back into the system, and almost cyclical recovery in a lot of sectors like autos and things will plan out. Interest rates also have kind of come down. So that path of recovery, I think we are underway. Obviously, the near-term bump, as you mentioned, can delay that, and we don't know how that pans out. But if I take a 2-year view from here, I think India's growth rate, we could go back to around 6.5% or so, which in relative terms would still, because global growth outlook also, while it had improved a bit for this calendar year, but look at where China is. China again would probably be below 5% growth this year. So in relative terms, I think the differential of growth, our belief is that while global will struggle to grow because all the ammunition which the central banks had to put in terms of monetary stimulus, fiscal stimulus is already being done. In India, there is still some room because we have to reflate from the low what we created, right? So the growth differential over the next few years, I think, can again widen for India is what our belief is. I mean, barring what happens in the next 1 quarter or so. And given that, I think the premium for India, I think, will continue, I think, is what our view is.
All right. So last year, there was an foreign equity inflow of closer to 1 lakh crores.
Yeah.
This year started off positive, but the last 1 week is totally reversed gear. I wouldn't probably make a projection for the entire year, but till the second half at least, do you expect any big movements with the foreign institutional investors, or they will continue to put money where the safety is, which is the US 10-year bonds?
So again, those will be bouts of periods, okay? I mean, general view is that the money flow into emerging markets, because that's how the money has been coming. It's mostly the passive money which has been coming in, and ETF flows. I think that will continue to remain positive. I mean, in the last couple of weeks, we have seen some outflows over there because of the risk off, okay, as you rightly mentioned, what's happening on the global front. But again, that would be a transient phenomenon, as that's the base case assumption as what we are looking at. Because the way things are globally in terms of easy money policy globally, even US dollar is not, I mean, currently it's US dollar is again starting to strengthen, but otherwise it should remain fairly benign. So that is positive for emerging market flows. And emerging market growth, economy growth also with, I mean, we don't see any major balance sheet issues across the emerging markets. So the outlook for emerging markets looks slightly better. I mean, they have underperformed huge in the last 10 years. The risk rewards are looking favorable. So if that money flows in, and India will get its due share of allocation over there, and that's our view has been that this year also we should see fairly good inflows from foreign investors into equities globally and into India.
Okay. The big respite for India, of course, is the domestic money, isn't it, Mahesh? And I just want to understand what's your sense about whether the SIP flows or other flows would continue as they have, barring one or few instances in the last year. And if indeed that those flows are even benign as of now, I don't know what the situation in late Feb or March has been, but if indeed they have been okay, would you reckon that, I mean, where is it that you would look to park in this money? As a large domestic investor, where is it that you are sensing opportunities?
So the domestic flows have been fairly steady.
Even now?
Even now, in the last 2 months. And we've gone through much more volatility. I mean, at least from an India-centric perspective, a lot of negative news flow last year, right? Where global was doing fairly okay. And even in that period, we have seen, barring a few months, where we saw redemptions coming in from the large HNIs, right? But the regular SIP money was fairly steady. And I don't see any reason why that should change. I think that money, and with the markets having come up a bit, again, the returns which are looking negative are starting to look slightly better. Also, what is happening is that for a retail investor who's putting money into mutual funds, it's also important how the portfolios do, because one is the headline market, Nifty, what was doing. But the breadth of the market has started to improve, right? In the last couple of months, we've seen that. In fact, we're just looking at it in the last year till date, while the Nifty is down 7%, there are almost 35%, 40% companies which are given positive returns, which is not the case last year, right? Nifty was up and most of the companies were down. So given that, I think, scenario, I think you should see the flow remaining steady. We don't see much of a problem at this point in time. And in this kind of a market environment, at least from an investor perspective, I think we are advocating that larger allocation should be made towards a multi-cap fund. We see good risk reward on large cap as well as the mid and small cap space. So multi-cap would be a large would be a place where bulk of the money could be parked in, and then some money in large cap funds and selectively in the mid and small cap space. From our portfolio perspective, where do we see opportunity at this point in time? I mean, the growth and quality have done very well in the last few years. I think the growth stocks will continue to do well. The returns there would be probably more modest because we've seen already the big valuation re-rating over there. There are a couple of sectors, which we are positive from the next couple of years perspective. Consumption has seen some kind of a slowdown, but we like small ticket consumer discretionary space because low ticket, right? Large ticket discretionary will still take some time because unless we see a big buoyancy in the income levels, we won't see that coming through. But small ticket consumer discretionary, retail, apparel, footwear, all those consumer durables should see a steady growth driven by gain from unorganized sector, some increase in per capita incomes. Besides that, banking and financials, we still prefer, we like corporate banks, selectively. And the broader private sectors gaining market share from PSUs will continue to do well. Apart from that, pharma is another sector which has underperformed in the last 2 years. We are again positive on that name. Domestic pharma is doing fairly good, and we're seeing a steady growth over there. And even large companies which have exposure to the US side, we are seeing the pricing pressure ease off a bit. So we are seeing good earnings growth in that sector over the next couple of years. So these are some of the sectors where we are positioning. And just to play the domestic cyclical recovery, I think cement. And again, if you want to be contrarian, then telecom looks to be a good sector to look at.
Okay. I don't want to ask about a specific, this is my last question, by the way. I don't want to ask about a specific view on a particular company, but I saw that you guys, I think if I'm not wrong, have got a large allocation to the SBI Cards IPO as well. My question is on the cards business. Do you reckon that there's a lot of talk about how this mobile payments disruption could hit the growth of credit card business in India? I mean, parallels are being drawn to China, wherein the per card spend in India is higher than that of China, and China spends have come off because of Alipay and some of the others.
Right.
Could that disrupt the business in India, or you think that is some time away?
So I think disruptions can happen. I mean, what we've seen parallels across the world, I think those can happen in India also, and it's just a question about. But I think in India, if you look at the penetration levels, are very, very low. So there will be some market share gains, which will come in from some of these disruptors, takes market share. But the penetration levels are very, very. If you look at the total population of debit cards in the country and the credit cards, they are. I mean, the percentage ratio is like in single digits. So I think what it offers, at least in the medium term, is opportunity to really at least show pretty high growth as you increase the penetration levels. Obviously, as penetration increases, your spend per card will come down. But I think at least some of these companies in the card business, the way it's growing, they're exhibiting growth upwards of around 25% or so overall the industry itself. So when you have that kind of a growth rate, even if there is some competition kicking in and takes away, there'd still be a healthy growth for medium term, and that's what makes that sector exciting to look at. In an environment where growth across various sectors is still a challenge.
Okay. Mahesh, one last question. So the RBI governor also recently spoke about the biggest challenge for the banking space being credit offtake at 7% versus peaks of about 12-13%. That's a big concern. And now with coronavirus, do you feel that this could come down further and that could challenge the banking supply system?
Yeah, so you're right. I mean, the overall credit growth has been weak, again, primarily from the corporate side, right? So the corporate credit growth has been negative, right? Retail has still been slightly better. And we were looking at actually growth to pick up slowly from these levels because working capital, slow pickup in the economy, inflation also picking up because that also affects, right, nominal growth. So inflation also was weak last year. So, but yeah, I would agree. I mean, if the coronavirus leads to supply side shocks initially, and also that on the demand side, so you could see services sector get impacted. India has been currently unscathed. Okay, if you look at global services PMI, they have got impacted. India has still been around 50 plus. But if it hit us, we could see some slowdown over there, and it could delay the recovery in terms of credit growth what we're looking at. Large pickup in credit is still some time away because large capex, okay, on the corporate side, we're not seeing anything coming through over there. So it will be again a slow. It is driven by retail and services.
That is going to be the case for some time?
It's going to be, unless government spends. The government is talking about a lot of investments on the infrastructure side, but they have to get the act in place in terms of the funding aspect, right? They're talking about IIF fund, how to get money from foreign investors. I think that's an area, unless that picks up, those large, chunky, big investments pick up, I think you won't see the credit growth picking up and going back into double-digit growth rate.
Mahesh Patil, so good having you today. Thank you so much for being with us on BloombergQuint and giving us your thoughts. Appreciate your time.
Yeah, thank you.
And viewers, we come to the end of this show. The markets bobbing between the red and the green, but for now about 0.5% in the green, but the Bank Nifty is underperforming. Keep that at the back of your mind. With that, it's a wrap on this leg of Indian Open from Devin and me and the team that put this show together. Thanks so much for watching.